Hello, a very lovely good evening from here in Delhi, and hope as usual that each one of you are absolutely fine and absolutely in fine spirits. We always pray to the Almighty to keep you in sound health, in fine spirits, and at the same time shower upon you supreme success. So, in this particular session, which happens to be a very special session and has been what we call brought before you, courtesy SuperProfs and with the tremendous efforts of CEO Juhi Gupta and course coordinator Satyam Mishra. And I'm really thankful to you deep down from my heart for what we call conducting this particular session for the benefit of the student fraternity, because of late I have been receiving lots of what we call messages with respect to the preparation strategy of NDAs, how to go about it. So many times, the students have been asking and tossing up this particular question. So please conduct a special session for the preparation of the NDAs and what we call for the preparation of the accounting standards. So we have heeded to your advice, and we are conducting this particular session today. Of course, this particular session will be of a duration of 30 minutes. In the first 30 minutes, I will, of course, as usual, give you some tips and tricks how to go about what we call in a strategical, precise manner with respect to the preparation of the NDAs. And I'm very sure after going through that, you must feel actually that so many questions which have been springing down in your hearts and mind both would get erased out. So here we go and start what we call this particular session. After having spoken what we call for the first 30 minutes, last 10 minutes I will keep it for you to raise any question in case if you will have any. So first thing is first. First of all, we need to know, because I've seen many students have got great confusion with respect to the serialing of the IND AS. So here, please pay attention. Here I have written IND AS in prevalence. This is the first sheet where I have written IND AS and AS preparation strategy. And here I have written IND AS in prevalence. IND AS in prevalence, what does it suggest? It suggests means the IND AS, first of all, you need to know which are the IND AS which are prevailing, which the entities are supposed to adopt. So here we go. The first one, as you can see, is the presentation of the financial statements. Needless to add that it is a part of very much what we call syllabus, then inventories. However, I was very surprised when one student tossed a question, sir, you didn't do what we call IND AS 3. My dear student, the fact is that neither IND AS 3, nor 4, nor 5, nor 6, these standards right now are not there. These are blanked. That means these spaces are blanked in the manner. First of all, these have been reflected by shaded area. There in practical life right now, there is no IND AS by the name of IND AS 3 or 4 or 5 or 6. So after 2, we come over to IND AS 7, which deals with the statement of cash flows. Besides that, we have what we call accounting policies for changes in accounting estimates and error. Then we have what we call, as far as ninth is concerned, I have already told you that there is no standard because it has been reflected by shaded area. So right now in practical life, there is no index or further distance, any IFRS. Then as far as 10th is concerned, it deals with what we call events after the reporting period. Then 11th deals with construction contracts, and you must pay attention what I have written in the bracket. In the bracket, it has been reflected that now construction contract is replaced by IND AS 15. In fact, to be very honest with you, now construction contract is deleted. It has submerged into what we call accounting IND AS, what we call 115. Then income tax 12. But right now, again, there are three standards which have been reflected in shaded area. They should give you a clue that right now there are no IND AS by the name of 13, 14, and 15. Then we come over to 16, property, plant, and equipment leases. I've written in bracket now replaced by IND AS 116. So it means that leases is deleted. So you need not require to do AS 17. Now instead you are going to do what we call IND AS 16, which very, very recently I have uploaded, and with lots of what we call discussion in it and with lots of case studies. And you must have noticed that. Then 18, of course, earlier there was a standard by the name of revenue recognition, IND AS 18, but now again it has submerged into accounting standard IND AS, that is 1115. So that means IND AS 15 is nothing but it is a merger of what we call existing IND AS construction contracts, that is 11 and 18 revenue recognition. I hope it is now clearer to you. Then besides that, we have got employee benefits, then In the below it, I have written 28, that is accounting for government grants, and of course, disclosure of government assistance. Then 21 deals with effects of changes in foreign exchange. Now, this was the first sheet, correct? This is what I have written in the first sheet. We come over to the second sheet. In the second sheet, here it starts. First of all, we have IND AS 22, but I have written blank. That means it is reflected what we call through shaded area, which should give you a clue enough that right now there is no IND AS or for that distance any IFRS by the name of 22. Similarly, IND AS 23 borrowing cost it deals up with, then 24 related party disclosures, but 25 and 26 presently no IND AS. 27, 28 you are supposed to do. 29 again you are supposed to do. Which are the indices which you are supposed to do or not to do, that I am going to talk about. But right now I am basically acquainting you with the serialing of the indices, because many student nurse a confusion for right now 22, 25, 26, and again shaded area 30 and 31 shows that presently there are no IND AS for the same. That means there is no IND AS 30, no IND AS 31. Then we come over to 32, 33, and 34. These are the standard which deals with what we call financial instrument. 32, 33 deals with earning per share, and 34 interim financial reporting. Then 35, again, I have written actually no IND AS. That means there is no corresponding IFRS or IND AS against the serialing 35. Then 36 deals with impairment of asset, 37 provision of contingent liabilities and contingent assets. Then we have what we call 38 intangible asset, and 39 I have written no IND AS and IFRS. It means presently there is no IND AS or IFRS by the name of 39 or by the serialing of 39. But earlier, 2, 3 years ago, there was a standard that was IND AS 39. It used to be deal with financial instrument, but now it has been replaced by IND AS 109. So 39 is deleted. So there is no standard now for 39. 40 investment property and agriculture. As you know, there are many Indias which are based upon what we call international accounting standard, correct? And there are some what we call Indias which are based upon international financial reporting standard. Basically, standards which are based upon the international financial reporting standard, they are in the series of 100. And such Indias which are based upon international accounting standard, they are in the series of, you can say, 1 to, they are in double digits, in put it simple words. So after that, after 41, I have written 42 to 100, no IND AS. That means 42, 43, 44, 46, 47, 92, 81, 78. There is no IND AS. From 42 onwards, in fact, from 41 onwards, there is no IND AS or IFRS till up to 100, correct? But after 100 till up to 116, not a single slot is vacant. Every every slot is what we call occupied by a particular IFRS, that is 101. It deals with first time adoption of Indian accounting standard, and 102 deals with share based payment, as you know. 103 business combination, 104 insurance contract, and 105 non current assets, and of course with discontinued operations. The 106 actually deals with exploration and evaluation of my mineral resources, and the 107 deals with financial instrument and disclosures. 108 operating segments. Then next sheet, this was sheet number 2. This is the next sheet. Here I have started off with 109 financial instrument, 110 consolidated financial statement, 111 joint arrangement. Then you can see 112 disclosure of interest in other entities, 112 fair value, 113 in fact fair value measurement, and then we have 114 regulatory deferral account, as we call it, 115 revenue from contracts with customer, and 116 which is the latest. Now, problem with the student fraternity is that they simply take into account and they feel actually as if there is standard for every serial number from 1 to 116. This is the first doubt, first hunch, and first dreaded hunch which I want to erase out. Anyone from 1 to 116, if he will look at, he will feel we may have to do 116 what we call IND AS. No, that is not the case. So after going through the first three what we call sheets, correct, you must have noticed that there is no IND AS for 3, 4, 5, 6, 7, 13, 14. And then we also talked about 22, 25, 26, 30, 31, 35, 39, and from 42 to 100. No, these serialing reflects that there is no IND AS by the name of what we call these serialings. And if I'm going to add all this, it will come to 74. That means out of 116, 74 slots are vacant. From 1 to 116, there is no index for these slots. Are you getting my point or not? That means if I will take into account serialing from 1 to 116, 74 slots are free. There is no index for the same. So if you subtract 74 from 116, you will be left off with 42. However, it means now effectively we may say that so far or hitherto till up to this particular point, 42 what we call index are prevalent. They have been issued. However, at the same time, you need to keep that into account that these remaining 42 standards include many standards which now stand deleted or what we call replaced. So we come over to the next analysis. Indias which are not required to be done as no more part of the syllabus. Now, out of 42, actually, as I have already told you, that out of total 11674 slots are vacant, there are no Indias for the same or IFRS for the same or International Accounting Standard for the same. So technically speaking, we are supposed to do 42, but at the same time, 42 includes many standards which are now, as I said a moment ago, deleted or replaced. So which are the standards which have been deleted? Quite obviously, you would like to know that first. I'm very sure about that. So Indias which are not required to be done. That means you need not require to do these what we call as standards. Correct? Remember, you technically there are 42 standards which have been issued. That's a different metadata. Out of that, many standards have been deleted now. For instance, now just have a look over here. Out of this 42, you need not require to 20 need not require to do 29. Not because of the fact that it has been deleted, but the fact is that it is not part of syllabus. Reason being is that there are some standard on which many rework is still going on. There are differences of opinion. There are differences of, you can say, um, concepts. There are differences of what we call their applications. So on account of that, many revision work is still going on, and that's the reason professional bodies have decided to not to keep it as a part of their syllabus. So 29 you need not require to do. At the same time, 18 has been deleted. As I've already told you, it has submerged into Indian Accounting Standard 11517. IND AS 17 you need not require to do because same has been now replaced by IND AS 116, as I just told you a moment ago while going through the what we call various serialing. And during that serialing, I also told you that AS 11, which used to deal up with construction contract, now has been submerged into IND AS 115. So it means 18, 17, and 11 have been deleted. So no more such standards now. You need not require to do all these standards. Similarly, 114, you need not require to do. It is not deleted, but at the same time, the reason is same, which I talked about 29, because a lot of revision work is going on account of some controversies or diversion of opinions or what we call complexities in its applications. And there is no unanimity as far as what we call their application is concerned. So that's why it is not a part of syllabus. 116 on account of the reason which I just mentioned above, and even 104. All these standards, a lot of revision work is still going on, so it is better to not to make a part of the syllabus. That's the right thing. So out of 42, 7 standard you need not require to do. Correct? So once it is clear, things should also be clear, and you must be feeling a little bit of what we call on the lighter side, because now you are supposed to do effectively only 35 accounting standard. But again, a good thing for you out of 35, correct? Remember one thing, there are many standards which have purely relation with the what we call chapters, isn't it or not? For example, we have done India's 103 business combination. There are near about 31, 33 lectures, and very comprehensively we have covered. I hope each one of you would agree on that count. Similarly, consolidation, near about 33 lectures, and lots of case studies, questions we have covered, including every question of module. And one more thing here, I just want to actually tell to the student that two more lectures I'm supposed to what we call upload for consolidation by next Sunday. It will be uploaded. Correct. So those two standards relates to chain holding. Somehow actually skipped out of my memory when I did what we call consolidation. So two more lectures I will have to add to it. So you need not require to worry on that particular count. 109 financial instruments and 107 financial instruments again, and 32 which is written in the next sheet. This is sheet number 3, and below it is sheet number 4. I'm just keeping it here, correct, just to keep this segment before you. This is the segment which I'm talking about. First of all, you need to understand that effectively there are 42 standard, out of which 7 you need not require to do simply because some are deleted and some have been replaced. That means effectively you need to do only 35. Out of 35, these standard which I'm talking about now relates purely to the chapters. So you need not require to put up any extra efforts. You need to put the efforts on the related chapter itself, and these standard will automatically get covered. Isn't it or not? India's 109, 107, and 32. Recently, I have reoriented it because there were some technicalities, technical flaws earlier, honestly speaking, as each one of you are aware of this particular fact that some sessions have been recorded in my from my home studio, so not from my professional studio. So on technical count we may lack, but on content count definitely there is no point and there is no room for any what we call lacking, correct? And now, financial instrument, I would advise actually you should do all the, even though in your module it has been given hardly of 2 or 3 pages, but in spite of that, I have given here about 10 lectures in it. So you need to do that. One important and very significant point is with respect to IND AS 113, there is a chapter in your course by the name of fair value measurement. It is nothing but IND AS 113. So you need to put a very special what we call focus to this particular study. Don't neglect it, even though it looks a little bit complex. But we on our side have tried our level best effort as we normally do to make it as simple as possible. You must do this, do all the case studies which have been given in the what we call lectures. Correct? In fact, when you do any Indies, you need to do only the case studies which I have given in the what we call lectures. You need not require to put up any extra or special efforts. Then 100 besides 113, you need to do 102, which deals with share-based payment. Correct? Share-based payment, I have again recently actually reoriented it on account of the same reason, not because of any amendment or something like that, because earlier when I recorded, I suddenly found actually there were some technical issues. Even though, see, we honestly admit, and you too also here we need your cooperation when lot of work we have to do, correct? And you must have seen that how much pain we take actually. Even I write each and every question. Sometime it may happen. Sometimes student complains that there are some audio issues, but see, you all are matured enough. Even though in one or two what we call lecture, if there is audio issue, you need not require to worry on that particular count, because if I feel that on account of that audio issue you will not be able to comprehend, I will be the first one to replace it. But if I will feel that even by going through the what we call written work you can understand and comprehend it, I don't think there is any need to replace the same. So that's the reason, in respect of what we call complaining unnecessarily, it is better to source some maturity and try to understand our complications, because a lot of efforts go behind what we call recording a particular chapter, and we are always what we call engaged in it. Correct? So share-based payment, this is 102. 111 I would, because most of the students are not aware of this particular fact. They take what we call joint arrangement as a normal accounting standard. No, you should not commit this particular folly. It's a grave mistake. In fact, 28 and 111 are as important as your 103 or 110. So I would love you to actually pay special what we call attention. So these are chapter oriented standard. Effectively, you must understand that now you have to do only 35, and out of 35, 9 are related purely to the chapters. So that means we are left off with only 26 theoretical standards, you can say, wherein we need to stress upon the case studies. Is it clear to you? So that is how you will suddenly feel that your burden has come down by leaps and bounds. I'm very sure about that. See here, when I say strategy, what exactly the strategy is? Strategy means basically a plan of action for the overall achievement of a goal. So, and what exactly the plan of action? You will be able to frame a plan of action only once you are very well familiar with every nitty and gritty of the thing which you want to actually plan about. So that's the reason why you need to know all these things. These are chapter related standard, automatically will be done. However, you will have to pay a bit of attention towards 28 and 111. So now you are left up with only 26 standard, which you need to focus upon. No doubt about that. This is the part where will consume your time. This is the only segment. See, out of 26, these are the 10 standard where you will really need to put up some efforts. For example, India's 101, all these standards have been recently what we call recorded. And again, I always accept, and you must also understand that why, because all these standard, mostly these standard have been recorded from home studio. So there may be some what we call falteration on what we call technical side. I am the first one to admit it, but definitely you must have also noticed the pains I have taken. I've written every case study, I've written every point, and On content issues, we are at the forefront. I need not require to tell that, and it is not an arrogant statement. I must confess that you would agree to upon. 101, first time adoption. This is a very significant accounting standard, so you need to stress upon it. Do all the case studies related to it. Similarly, next in line is 105. Many students ignore it. They do not understand the what we call importance of this particular standard. Surely you are going to have case studies from all these standards in the examination. India's 116, especially the modification part, is very important, so pay extra attention towards that. India's 115, to be very honest with you, not a tough standard. It is a merger of earlier construction and revenue recognition. So both these standard 11 and 18 now have resurfaced into 115. You can say it that way. AS1 is very significant, very significant. Correct? It is very important. Lots of case studies are there in it. So you please do this particular standard with what we call great attention and great focus, as I keep on telling every time. 21, I need to require to tell you, is very, very important. All these standards are most significant, most important one I need not require to tell. Similarly, besides that, I have kept even IND AS 2 under the category of most significant and important and formidability. Some may feel very surprised by that because to some it appears quite simple. No doubt it's a simple standard, correct? But at the same time, in my opinion, it's an important simply because of the reason that there are case studies, many case studies. I'm very sure a particular case study would get what we call tossed up in the examination. Seven, correct? It is statement of cash flows, quite important, correct? Then it is in fact important standard. All these are important standard 8 and 10. So you can expect case studies from this particular these set. Lots of case studies I'm very sure would be asked in the examination from this particular set. So you need to be aware of which are the standard where your effort proportion should be the highest, correct? So that means 26 standard we are supposed to do technically, wherein definitely some time will be consumed, no doubt about that, but some efforts will also be consumed. You will have to sweat it out. But ultimately, the task is to come out with flying colors, and for that, we need to sweat out. No doubt about that, because without burning midnight oils, you cannot have what we call golden river before you, as the saying goes in English. So now, next in line, that been out of 26, now 10 we will have to actually do, no doubt about it. So we are left up with now 16, and the next set I have written quite important. In fact, under this set I have kept 13 standards, and out of those 13 standard you need to do the standard which I have written in bold. For example, 16, 12, 40, and 41. These are the four standards which you will do first out of the remaining section, and whatever remaining what we call standards are there. These are absolutely in line with your existing standards. Since you have already gone through your existing standard in your earlier phases of education, you need not require to actually sweat it out to complete what we call standards such as intangible assets. Earlier you did by the name of 26 intangible asset existing standard, isn't it? It is absolutely similar to that. Similarly, you have earlier done accounting standard 29. Now it is IND AS 37, provision contingent liabilities and contingent asset. So it quite obviously, since you are aware of all these things, so these standards should not put what we call you in a situation which is called complex. That means you should feel quite easy while doing these particular standards, isn't it? Impairment of asset, absolutely on similar lines to the existing accounting standard AS 28. Similarly, IND AS 34, interim financial reporting, absolutely is similar to what we call existing accounting standard AS 25. Then earning per share, you have earlier done accounting standard 20, it is on similar line. So these are the four standard which will consume a bit of time. Otherwise, rest of the standard employees benefits, if you have done earlier AS 15, then this standard should not pose you any problem. Similarly, you have done earlier accounting standard AS 12, accounting for government grants is absolutely quite on similar line. And similarly, you have done earlier AS 16. So IND AS 23 borrowing cost is on similar line. Earlier, you did accounting standard AS 18. So IND AS 24 related party disclosure is on similar line. So this is the last sheet now for you, which I'm going to bring. This was the fourth sheet. And now, if I will total this set, quite important, the total will come to 13. So you can see total standards were 42. Out of that, 7 we need not require to do. We are left up with 35. Out of 35, I talked about 9 standards which are purely related to the chapters. You need not require to do that. You are left up with 26. Now, out of 26, I just told you 10 are most formidable one. So now you are left up with 16. Out of 16, I told you which are quite important. 13 standards quite important. And even among them, actually, I told you which one to do first. So from 16, if you are going to subtract 13 standards, these 13 standards quite important, then you will be left off with 3. And these 3 good thing is that you need not require to do at all. The reason being is that 27 is a theoretical hardly one page standard. And similarly, 112 relates to disclosure. Disclosure, hardly anything is ever asked. And 108, even though it is very much a part of syllabus, but still I have kept it under this particular category. Surprisingly, reason being is that I always feel that some standard wherein lots of controversy and lots of revision work is still on. I I have a great doubt whether anything could be tossed up. So you can leave these 3 what we call standards. So this is how your preparation strategy should go about as far as what we call IND AS is concerned. I'm very sure that after having gone through these points, now everything is quite crystal clear before you, and you should understand that which are the standard where you need to put a lot of focus, and which are the standard which you can be a little bit at ease, correct, and which are the standard which are purely related to the chapters. Quite obviously, since you have done the chapters most, so those standards need not require any extra efforts. One query, actually, one query which I have been receiving also. So please talk about accounting standard, which we are supposed to do. So there are 29 accounting standards, no doubt about that. 30 and 31 haven't been notified and will never ever be notified, to be very honest with you. So effectively there are 29 standard, and each one of you are aware of it that out of 29, 6 and 8 is no more prevalent. 6 dealt with depreciation earlier. It is now submerged into what we call accounting standard 10. And earlier there was a standard by the name of research and development. It has now become a part of 26. So out of 29, these 2 standards are no more there. So effectively 27 notified accounting standards are there. But out of these 27, you need to do only the standard which I have marked. That means AS1 you are supposed to do. You are supposed to do AS2. You are supposed to do AS4, 5, 7, 9, and 10. Why I haven't marked and why I'm telling you you can leave all these standard, because these standard will be covered by the what we call IND AS. As I told you, 29 will be covered by 37. As similarly as I told you, 28 because it deals with impairment. So when you will study what we call IND AS, so automatically these line will get covered. So you need not require to do all this. Do only this much. That is more than sufficient. And why not 3? Because it is absolutely similar to IND AS 7. You need not require to do. Now, one point is that if you have done existing standard AS2 earlier, and you feel very comfortable, then you need not require to do IND AS2 because it is absolutely on same lines, correct? Similarly, if you are very well familiar with all the provisions of existing standard AS10, that is property, plant, and equipment, then you need not require to do IND AS16. Of course, it is also property, plant, and equipment. That means these 2 standards, IND AS2 and AS2 and IND AS 16 and AS10 are absolutely same. So this should be your preparation strategy. That is how you should actually go about when you prepare what we call for your IND AS and what we call accounting standard. I'm very sure that after having gone through these inputs, you must be feeling a little bit at ease. And we also sincerely hope that this particular session must have given you a little bit of what we call enlightenment with respect to the strategical work which you need to adopt while doing and preparing for this particular part, of course, which is a very, very formidable part. Before I close down, let me thank once again the CEO of SuperProfs, correct, Juhi Gupta, and course coordinator, academic coordinator, Satyam Mishra. They have taken tremendous pains to bring this particular session to you, and I really applaud their efforts and thank once again to them. I close down here, but at the same time, I am very much here present and looking out for your queries in case if you have any. There's no point in asking unnecessarily, but in case if you feel that you have something relevant to ask, you definitely can ask, and definitely I'm here to actually answer it. So on that note, I take what we call leave of you. It was a very pleasurable, I must say, interactive evening with you. And quite obviously, it not only pleasurable, but it is treasurable one for me too. So on that count, I take leave of you, but I will definitely move out of the studio only after next 10 minutes. Correct? So on that count, it's a goodbye from my side, but real goodbye will be after 10 minutes. I'm waiting for your queries. In case if there would be any, I'm surely would answer those.